Real estate term of the day, reverse mortgage. A reverse mortgage is when you're 62 or older and you want to get a loan based on the equity. Now, they don't give you all the equity, they only give you a percentage of the equity. And why is that? Because you don't have to repay the loan back. But what happens? The interest rate that you're not paying gets tacked on to the balance. So give you an example. Let's say that your house is worth $500,000 and you want to take out and you want to do a reverse mortgage. You don't want to go anywhere, right? You don't want to sell your house and move into a little apartment. You don't want to do that. You want to stay in your beautiful house. I don't blame you. So they give you a loan. Now the loan it's not going to be 80% loan to value. It's not going to be none of that. It's going to be probably 50 or 40% of what the house is worth. So let's just use $250,000 as a basis. So every month there is a payment, right? Oh, Mr. Seller, here's the interest. I don't want to pay the interest. You don't have to. That's the whole point of a reverse mortgage. Okay, you don't have to pay it. So what do you think happens to that interest? It gets tacked on to the mortgage. So every single month, this is what happens to your loan, to your balance. You owe more and more and more and more, right? What happens when they reach the value of the house? Well, if you're still alive, too bad, too sad. The bank takes a loss, right? This is how, when you do a reverse mortgage, they're going to see how long you have to live. And the average age nowadays is 75 to 77 years of age. So they're going to look at that and say, well, this is how much we have, this is our investment, this is how much money we can put in. So that is exactly how a reverse mortgage works. Now, can you sell the house? Absolutely. It's just a loan. Just pay it off. Sell the house, pay what you owe, and move on. Now, the sad part about it is that you still have to continue to pay your insurance and the property taxes. So it's a good thing because you get money up front and you don't have to get it up front, by the way. They also give it to you monthly. It's up to you. It's going to be a choice. And every month you'll have the opportunity to either pay off the interest or pay the interest of the payment or not. And if you don't, boom, 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 it gets tacked on. What happens if you pass away in the house? Well, they'll give your heirs time to sell the house, usually 6 months to a year. They could put the house on the market, sell it, pay off the bank what is owed, and they could keep the equity. For more tips and tricks, please visit my website. And if you want to set up a one-on-one tutoring session, go ahead and pick a time and date. And of course, I'm referring for the state sales agents test or the brokers. Till next time.